Hi, everyone. Good morning. So before I start, I will give you a little bit high level of the stuff I want to touch. I'm going to explain exactly what I'm going to talk about, and then I'll introduce myself. You'll excuse me in a second. The less interesting stuff, and then I want to touch exactly where we are today in the world, and then we'll dive into things. And I want to say also a big thanks to a company that is going to talk, Epinote. They're going to join me here later on today. So, sales learning curve. We have a lot of companies here that are very, very early stages in Poland. I'm going to touch exactly how to build your sales from beginning till the A round, and I'm going to touch exactly how it should be done. Then we're going to have an example on how to do it. The main problem that we have today in Poland, going to be very specific to Poland, is that majority of the knowledge, majority of the stuff that we have is either B2C or self-serve, or SMB. Not a lot of our companies are B2B and real B2B, especially enterprise B2B. And it becomes harder and harder to build these kind of companies here, especially when we don't have the knowledge and we don't have the people here. And I'm going to teach exactly from real cases how we've done it. So I'll start a little bit regarding myself. I'm a serial entrepreneur, Israeli. I love building companies. Okay. And the reason I'm talking to you guys today is that when I started my first startup, there was no one that had the knowledge in Israel to help me, specifically on this. I needed to know how to build my companies. I came from an enterprise company. Previously, I managed an enterprise company. My deals were between $50 to $30 million a deal. Took me between a year to 3 years to close those deals. And that's what I knew. That was the enterprise sales of before 2000. And what I needed to know was, how do I get into SaaS? And I was started to meet with a lot of different founders in Israel. Majority of them were technical or product guys. They didn't know shit. And I came frustrated out of it in meetings that I had. And I said, okay, I'll promise myself the minute I have a little bit more time, I'll help other founders. And for many, many years now, from about 2007, I meet every morning a different startup for half an hour, really helping them just for coffee. And the only thing I ask for other founders and also from you guys, just help other people, okay? Especially in our environment here in Poland, we need to do it. So that's the first thing. In 2011, I had enough of that, just the one-on-ones only, and I built Microsoft Accelerator, if you heard about that. We got to help quite a lot of different founders there, together with Sachi, my friend. We did it internationally also, everything for free. Everything to help founders. And about 3.5 years ago, we started Intel Ignite. It's a whole different program, enterprise, hardware, all different stuff. Again, helping quite a lot of different founders. So I myself, about 15 years ago, I started to invest. I got bored from investment. I don't really enjoy just the investment itself. I love building early stage startups. And I built a group of my friends called Team X. We invest together. And we invest into startups mainly in software, early stages, and we love to help them to build their companies. And about like 7 years ago, I joined in together with Innovo. Today, together with my partner Mihal, we invest together here. And I have the luxury of working with great founders like Piotr from Just Join IT, and Upacienta, More Growth, Zeti, quite a lot of Zowie, a lot of different companies that I'm guessing you know here. I had the privilege of working with great founders, but also the privilege of working within this great industry that we have here in Poland, which was very, very early stages when I joined in, and it's really growing very, very nicely. But we still have challenges, and my main goal today is to help you with these kind of challenges and how to overcome them. So that's about me. I don't want to talk too much about myself. Before I start, the main thing, and I'm talking right now in the venture. How many startups are here? Can you raise your hand? Startups? Great. How many of you guys are venture, you want to do a venture-backed startup? How many of you guys want to do a bootstrap startup? You're already doing it, so okay, but great. So I'm talking in the state of mind of venture, but it's the same thing for bootstrap. Just keep in mind that in Bootstrap you have a different way of building. I invest both in Bootstrap and in Venture, by the way. And in Bootstrap, for the guys that are in Bootstrap, it's the same way of building the companies, but with one big difference. In Venture, we have to build for the next funding round. We are all the time with a knife on us, and we need to be sure that we're going to get to the next round. And that's why I'm going to talk about how do I get to my A round. In a second, I'll explain it. In Bootstrap, we have to get to profitability. Our only investor is our customer, and the only way to do it is running after profitable customers. And the biggest mistakes, and I'm seeing it quite a bit here with Bootstrap companies that don't get it, and that's why they close at the end. They're not focused on the clear path to profitability, and doesn't matter what happens, I'm profitable. And that's something, and again, I have lectures about it. I'll be happy whoever wants to understand, but it's the same way of building these kind of companies, and just apply the things for yourself. Why am I going to talk about this? The biggest challenge today is the A round. And in a second, I'll explain it, but here in Poland, a lot of the founders just don't get it and don't understand it. So, before I dive into it, I'm going to give you the picture of what's going on in the world, and then we'll change. 2022 was a very harsh year for us, okay? Here in Poland, we had in the beginning of the war, and that's what we felt. But in the world, the entire industry started to shift. In the beginning of the year, till mid-year, all the later stage investments started to vanish. By the way, today, A and above is very, very hard to raise, okay? In US, in Israel, here in Europe, things was la-la land in 2022. Very crazy. Now we're starting to get back to normal, okay? Still not 100%, especially in the early stages. What happened from mid-2022, we started to see also the early stage vanishing in international investments, okay? And today, the pre-seed is freaking hard to raise around the globe, okay? Not here, in a second I'll talk about it, but the pre-seed is very, very hard. And the seed is easier because majority of the investors went downstream into the seed and they are playing there. But you need to bootstrap into the seed. And that's what's going on in the world. Now, why am I talking about this when I'm talking about sales learning curve? Because when we build these kind of companies, we have to take into account how the freaking I'm going to get into my A round. Okay? What happens is, in order to understand it, I have to understand what's going on right now in VCs. The VC world, okay, was when money was cheap in 2020 and 2021, they were able to raise money. Now that money is expensive and I can get 7%, 6%, whatever it is on my money, in order for a VC to give back to their LPs in 10 years, they need to do 5x on their money. VCs don't do that, okay? And not the 3x that you can do. So what happens is, these guys need to know that you guys are going to get them into their next funding round for them, from their LPs. And the only thing that they're in their mind is, are you guys are going to do that? Now, what happens is, here in Poland, our pre-seed and seed are much more easier than what we see abroad. But if I want to do a successful A round from a successful VC outside of this region, it's going to be very hard if I don't focus. And what we see today, by the way, we came back for pre-2020 that the graveyard of startups is between the seed and A. And I have to do the right preparations, okay? And what I'm going to teach you is the sales learning curve, but when I do it, it's very influential on the stuff. What do I mean by that? When I look at persona of my potential customer, it's not only, okay, where they're from, geography, what vertical they're in, blah, 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 all the different stuff that we'll talk about today. But when I'm focused on Bootstrap, my persona is a very profitable one. And I go to the ones that I can sell ASAP the quickest, and I'll make the most profit out, especially in the beginning, because I want to get to profitability. In venture, the persona I'm running after is those guys that will allow me to learn as fast as possible on the value and build correctly my go-to-market, because at the end of the day, this is what's going to build my machinery so I can come into the investment and get it. I'll give you a real example. When Michał and myself, we invested in September 2020 into Zowie, okay? And when we came in, we had a very, very big problem. And what was the problem? That everyone that looked at Zowie didn't want to invest at that point of time. It was very, very simple. Even in my group, Team X, a lot of people didn't want to come in. And the reasoning for that was there was a red ocean market just another chatbot, and why the freaking hell are these guys special? Now, as a venture-backed company, I could have focused on one thing and say, okay, my main KPI is ARR. If anyone doesn't know the terms, please stop me, okay? But the main thing wasn't that. The main thing for me was to prove that this solution has a real value and to decide what is the real value in the market for them, okay? And to be able to come to the investors and tell a real story about it. Not that I didn't get at the end also to ARR, but the real thing was to gamble what is the real value. In their case, was very, very simple. We came in, and the first thing, very strong founders, Maya and Maciek, okay, that believed and ran with it. They had only Polish customers when we came in, okay? But they had a solution that was very tailor-made for a specific kind of customers, and they got to results within 24 hours, when our competitors took between 3 to 6 months to get to results. And when we went into the market, our main focus in the first quarter was to prove that. So we put around them all the different things. We put a pitch around them. So Giddy from my team worked with them on the pitch. We started to sell, okay? Maciek was selling at that point in time. And Maya was in charge of getting us the lead generation, okay? And at the end of the day, what we got out of it, very quickly we understood exactly the value and does it work. And in a second, I'll teach exactly what we did there, but this is very crucial because otherwise we would not be able to get to our A round. And when we got to the A round, it wasn't about the ARR. It was about how unique this is an opportunity within this market that we were able to do. And we knew all of our numbers in the entire funnel that made sense for investors to come in. So, before I dive into the sales learning curve, one thing that I'm going to talk about, and again, very, very clearly, I'm talking about B2B sales. B2C sales is very, very simple here. But when we do this, we have different go-to markets. And the difference between all these go-to markets are only two things, okay? And the two things is my sales cycle and my average deal, okay? When I tell you that I'm doing enterprise sales today, the only thing that is different between enterprise sales, mid-level sales, and SMB sales, sales life cycle and average deal, and they have to make sense. What do I mean by that? That when I sell to GM, Bank of America, any corporate that you think, and I tell you this is my logo, that doesn't say anything today. They could have come into my website, bought for $99 by themselves without talking to me. That's self-serve. Okay? The difference between the sales cycles that we're talking is we have average numbers that we're looking in the industry. So when I do SMB sales, in average, it's anything above $100, which is very hard to MRR, which is very hard to sell in big numbers when I do that automatically. Okay? And usually it's about there, between that to about $1,000 MRR. Okay? And it takes us between a week to 4 weeks to close the deal. Okay? That's in the world of SMB. Mid-level, okay, usually takes us between a month to 3 months to close. In average, anything below the $50,000, which you don't go into procurement and legal and all the different stuff. In average, we're talking about $15,000 to $35,000 to do. And enterprise takes us between 5, 6 months, something like that, to a year, okay? And those deals are anything above $50,000, okay? The thing is, that the sales lifecycle has to make sense. I'll give you an example of a founder that did a mistake, okay? Just now from a real founder that he raised over $6 million. And his sales cycle doesn't make any sense because he didn't do the sales learning curve. What do I mean by that? He had an assumption that he's going to do land and expand. Real story, okay? A smart guy. And he said, I'm gonna land into an account and then I'm gonna expand. His land is $30,000. And he was successful in doing it. But it took him 12 months to do the landing, 12 months. And after 2 years, he still hasn't done expansion. And he's continuing to do these initial deals of 30,000. That's not a business, okay? If I land on 30,000, okay, and it takes me a year to do it, that's not a business. At the end of the day, it's very, very hard. So these things, when I have an assumption that I can do land and expand, and I'm guessing quite a lot of you guys do have these kind of things, it's an assumption. And you have to understand that the only thing I care about is to go validate that assumption and to see if it's working, yes or no. Before I start, one thing. Each and every one of you guys are a different company, okay? I'm not trying here to teach you today for your specific company. What I am trying to do, think what is the right kind of thinking and apply it correctly for your company, okay? That's the main thing I'm trying to teach here today. So, sales learning curve. I'm starting. So the first thing I do before I start a company is sales. That's the first thing we do. There's two different things that go in parallel when we build these companies. We have product market fit and sales learning curve. The sales learning curve starts even before. And what happens is when we start companies, we have an assumption that we solve a problem in the world. Each and every one of us. The thing is, we usually are incorrect. Not about the problem usually, but about can we really solve it? Is it the right way to solve it? And is it really harmful for the company or a real pain point for him? And our main goal is to go and validate it with investors, with customers, with partners, market thought leaders, all the different stuff. Each and every one of them we need to sell. And one of the main things, by the way, that I'm seeing here in Poland, that we don't do it because we're afraid to go to the American guy that at this point we don't know how to reach him. And even if we reach him, we're afraid to do it. You should not have that, okay? That's one of the things I'm going to talk about. You guys need to drink a lot of Israeli chutzpah in that sense and don't give a shit, okay? You only care about your own company and your success. And in order to do that, you guys, and I can tell you from my experience with founders from here, you're not less than anyone else, not from Israel, not from the US, and not from, you guys are good. So just go and get these people and get whatever connection you need in order to get in front of them. And that's what I do in initial phases. Now, when I start this, it's strategic, and majority of the founders don't understand it. So they understand the product market fit, and they say, okay, that's strategic for me, but the sales learning curve is very, very strategic. What I mean strategic is for the example I gave about the investment, because if I don't build this and I don't have the machinery, I'm going to get screwed. But the main thing is that it's so strategic in a sense that it has to be done by the founders. Because at the end of the day, there's a lot of innovation that I have to bring into my company, and only I can do it. Not some stupid sales guy that I bring in to sell to some Polish companies, and he brought me 5, 10 companies or whatever. He's not going to build the machinery for me. And not with the first $20,000, $30,000. I need to build it. And by the way, majority of my companies, we build it several times within the company. Just to explain, from $0 to $1 million ARR, we do the discovery. I try many, many different things, and I discover what's going to work for me. Okay, and let's say I have companies that we discovered that land and expand is working for us in specific segment, and that's our deals. And I'll give a real example. In one of my companies, we sell $35,000. Okay, takes us an average a month and a half to close those deals, and within 5 months, I grow to an average of $70,000, and I know exactly how to do it, and I have all the anticipation exactly how to build these kind of things. But this is exactly the way that I build the methods, and I know the numbers, and everything is about numbers in this business. So the first thing that we do when we build these things, and as I said, discovery of the first million is to discover it. The minute I discover something that's working for me, I go 100% into it, and with that I get to my 10 million usually, okay? But what happens, that's not good enough in venture. We need to get to $100 million, okay? Bootstrap, we don't give a shit about it. In venture, it's very crucial. Why? Because venture, if it doesn't get to the $100 million within 5 to 7 years, the venture is going to get screwed, and then we have disalignment between me and them, okay? And then all the different fights. So when I build and I decide to go in the venture world, I need to get to those numbers. And usually what happens, in between the 1 to 10, I focus only on that. And then when I get to 5 million, I start focusing, okay, on discovery of what is the next layer of the company in order to get from 10 to 100. And that's crucial. So when I open up my new go-to-market, I do it by myself. So usually if I discovered that my go-to-market from 1 to 10 is SMB or mid-level, then the discovery, the next one of the enterprise, is going to be a discovery that I'm going to do again by myself, and I don't trust anyone else to do it. I'll give you a real example, okay? So a sales guy that goes on a sales call and he discovers things, it's not going to work for him to come with a solution. And Maya just got in. Hey, good morning. So when we started to sell, and we decided, okay, we have an assumption that because we are able to show results within 24 hours, okay, initial ones, and within the first 7 days, we can really show them the success, okay, we're going to go and claim that success. But when we started the first quarter, which was fourth quarter of 2020, and Maya was in charge, she got us all these leads, but Maciek was running after and talking to these guys, and what we heard was, we coming on the call, we're saying, hey, you're used to get your results within 3 to 6 months. We can promise you within the first 7 days, much better results than what you're going to see after 6 months. Okay? We had a conversion which was much, much higher, over 30% conversion. The traffic doesn't matter, all that. But initially what we saw in the first month was the guys didn't believe us, because that wasn't normal in the industry. So it was just too good. You know, the sales guys that says, come, hey, I have this TV at home. That's what they felt. And when we saw that it didn't resonate with them, a simple sales guy would not come with a solution. We needed to come with a solution. And when we discussed it, we said, okay, let's offer them, okay? Let's offer them 7 days for free, try with us, and let's see if it's going to work for us. But there was an assumption that that will solve that problem, okay? That would not come from a sales guy. That will come only from a founder, especially in early days of a company, in order to think about it. And out of it, what came was also things into the product that we will be able to implement very, very quickly within 24 hours by doing everything automatically by us without the need from the customer to do it and showing those results. We had to change the entire funnel of how we're selling and how we're doing that, but that's innovation into the process itself. You cannot trust someone else to go and do it. For example, of enterprise, I have enterprise companies that we sell through partners, okay, on all the different things. I never start with the partners. I always do it by myself because I need to know first thing, to know by myself how to sell it correctly, and then I can only teach how to sell it. When we do the sales learning curve and when we start to do it, majority of the people haven't done it in the past. My co-founder, my managers, my investors, all the different players don't know. What happens is when we start selling, in one of my first companies, I started to sell. In the first month, we did about $1,000. Second month, we did about $5,000. Third month, we almost didn't do anything. And the third month, the investors came and say, Ariel, what's going on? Are we losing the company? And I was like, we're just building this stuff. And I didn't get it. My biggest mistake was that I didn't prepare them for that. When we start the sales learning curve and we start the stuff, I have to prepare everyone within the company also, okay? My co-founder, my managers, everyone within the company has to understand what are we doing and what is our real KPI, which is not right now to get to a specific ARR. It's not right now to get a specific MRR. It's one thing and one thing only. Learning. That's the only word that is important. And to get out of the calls and to learn exactly how to build my entire funnel and how to build the right way to sell my product. Now, just to give you an example, when we go on these calls, how many of you people have done sales calls? Raise your hand. Great. Did you ever have a sales call that you spoke with a customer and the customer, you felt no chance is going to buy from you? Did you have that? Anyone had it? Great. So majority of the cases that I've seen is that you go on a call, you see that, and you don't treat it. Especially here when people are too nice. Okay, the Israeli have the chutzpah, and they don't talk too nice many, many times. But especially me. But the thing is, when you go into this kind of situation, especially in the beginning of learning curve, it's the wrong thing to come out of the call and have that gut feeling. That's the wrong thing, because you try to sell. When I try a sales learning curve in the beginning, I try to learn. That's the only word I care about. And what I do, I stop straight away. That's what exactly you guys should be doing, okay? I stop the call, and I tell the customer, dude, I lost the deal. That's okay. I'm a founder. Teach me, what did I do wrong? Teach me, where's the value? The only thing I care about in the beginning is to understand where is the perceived value by the customer. Okay, and imagine you need to build like a ROI calculator for your sales guys. That's exactly what I'm looking to build here. And in order to do that, first thing I need to know value and focus on your value and getting that way of how he calculates the value for him. And that's exactly what you guys should be doing. Majority of the people just don't focus on the learning. Next thing on the learning, I record all of my calls. Now, usually, let's say in Ignite in Israel, nobody asks me about it. In Ignite in Germany, everyone stops me and says, Ariel, how can you record a call? Okay, the customer will never do it. So the first thing, 80 to 90% of the customers will always allow you to record it. And you can ask Maya, and we have our recordings. I have different libraries in my companies for BDRs, for account executives, for the first call, for account executives, second call, whatever, and for customer success. In each and every one of those libraries, everyone needs to listen to that. And the only way to learn is to listen to these calls. I can tell you that one of my first companies, we were sitting 5 people within one room, and the data flow was 0. I did a call at 12 o'clock at night with a customer, and I forgot to tell my partner in the morning exactly what I learned. That's really, really bad. The thing that we're trying to do is reduce time to market as fast as possible, okay? And in order to do that, the only way is to have a very quick flow of feedback of what we learned and what we think right now that we need to change in order to get there. So preparation for the learning is crucial, that everyone in the company understands it. Even developers need to listen to these calls because they come with a lot of new ideas of what they heard from the customers, okay? Sales learning curve. So how do I build this? The first thing is, what am I aiming for? And that's what I started with the example that a majority of the companies I meet here are focused on ARR. That's the wrong thing, especially when we talk about venture-backed companies, okay? In venture-backed companies, and what we're really looking for is to build a machinery, okay? And every company in the world has this machinery. On one hand side, I have my customer acquisition costs. On the other hand side, I have my lifetime value. In the middle, I have go-to-market, which is divided into 2 main things. One is all my assumptions, okay? I think I should go into mid-level deals. I think a mid-level deal will take me this amount of time. This is the persona I'm going to sell. This is what my sales guys need to do. This is where I'm going to get the leads from, blah, 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 blah. And the other side is all the KPIs that are related to it and monitor it in order not to have bullshit discussion between me and my managers, me and my co-founder. Everything is with numbers, okay? Now, the majority of the B2B companies, we discover initially the customer acquisition cost at this point. Lifetime value, we don't discover at this point. Very, very hard. What we do discover, by the way, in lifetime value, if anyone doesn't know terms, please stop me, okay? In lifetime value, we discover churn, even in the first year, which is churn in usage, which we don't lie to ourselves, okay? And you can see straight away, and you know that this company, although they bought from us, they are going to be churn. And the second thing is NRR, net retention rate. We see exactly how much we can grow into these companies, especially when we do land and expand. So we can learn and have initial learning here. In the customer acquisition cost, we learn much faster because we go out and we see where we're getting our leads from, okay? And majority of you guys, the first thing that we do is our own connection all around, okay? Then we go to events, we start email marketing, we start blah, 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 but we start doing everything and we see what works and what doesn't work, okay? And this learning, the minute I have all the numbers here, and the thing is that in many, many companies, you have good enough numbers in order to have a machinery in early stages for the 1 million to the 10, okay? Then when I say I get $10 million here, the investors understand exactly how much is going to go out of it. And same thing for me. I know exactly what goes out. This is what we're trying to build, a sustainable and repeatable business. That's our main goal. That's why this discovery is very crucial. Okay, so when we talk about valuation of companies and when we talk about A rounds and everything, we're not looking only for ARR that you're doing and how you're doing it, but this learning. Companies that come without this learning pay a very, very, very big price. And when we show it, this is exactly the kind of thing. So when I have majority of my companies that are not hardware or those kind of things, that have already numbers and should have numbers in A round, in the seed and pre-seed, we have presentation, we walk the investors through it and everything. In the A round, the founders know by heart the numbers, okay? And they talk. I know exactly where my customers are coming from, how much I'm paying, what is my conversion, and that's exactly what we're looking to build here. The second point is we have all these assumptions. The first thing is my persona. Who am I running after? Okay, and I have to define it, especially in venture. I look for specific personas that I can run as fast as possible. So the first thing, I have an assumption that I'm solving a problem in the world. I want to get to companies that I can sell quickly. So even if I sell into enterprise, majority of my companies, we start from mid-level or SMB in order to run fast, sell fast, and mainly learn. And then it also becomes much, much more easier to sell into the enterprises, okay? And the main thing is to have a sales cycle that doesn't take too long, implementation cycle that doesn't take too long, okay? Take that also into account. And value to the customer that is as short as possible, okay? All these things are crucial for me. I'll give you a real example of a company, okay? That they want to go into enterprise sales, and they started to sell, and they're selling. And their average deal, they started from mid-level, and the thing is that it's just taking too long for them to sell at this point. And the thing is that if they go downstream, they can sell in 10K much quicker and get to value much quicker. And they know it because they already sold several of those. But they didn't change it because in their set of mind from the beginning, they said, okay, that's my 30K, that's what I need to go into. And it will be okay to grow from there. But they set of mind, they were so into it that they didn't come back to the chart board and say, okay, just a second, the 10K is working for us. We are deploying. It's much quicker. By the way, the 10K is taking them a month to close the deal. The value is another month. And within 2 months, they already closed the next deal. And they had several, not too many, 3 deals, but it was good enough in order to do that validation and run after that. And the minute they had the shift, and they said, okay, let's go. And I had a lot of discussion with them about it. That's when they started to build the right way of the company. Now, it's not that that's going to bring me to the 100 million. That's not my goal. But the first 7 millions, that's exactly what it's going to get them, and that's exactly what's happening. And with that, they were able to raise the next round, by the way. If they were continuing to be stuck on the 30K, they would never get to the next round in a healthy way and never be able to do it. The next point, okay, after I decide who is the persona I'm running after, where am I going to get them? The main thing is, we try many, many different things, but the main thing and what I want to talk about is building the funnels. Every company has different funnels, okay? Every company has also different definition, and you have to have a different definition of what do I expect to get in each and every one of the steps of the funnels. I'll give you a real example, okay? So I'll start from the end of the funnel. Closed won, okay? One of my companies, the closed won, didn't work well for us. We discovered that it took us the first initial, in customer success, we have 2 different stages. The first one is onboarding, the second is ongoing. In the onboarding, all I care about is successful deployment with the customer, that he gets to the stage of the wow. The stage of the wow is when he says, wow, Ariel didn't lie to me. He really brought me to what he said, okay? That's the first stage. But what we found in that company was that we were losing companies at that stage. We were not able to get to it. And what happened was we didn't define well that stage of the closed one. And what do I mean by that? We didn't define the handshake between customer success and sales. What has to be defined? What is the KPIs of success for the company, our customer? How to deploy and how to make it well? And all that data was not saved even in the CRM. Okay. Another real example of that stage, by the way, is a company that believes in land and expand. Okay, this is not one of my portfolio companies. This is a company that I'm working with in Intellignite. Okay, and in their case, they don't have anything about the expansion. So I sit down with the CEO. I look at the companies. They have about 30 companies right now. All of them they deployed. Okay, and they work and they have like the initial deployment. But then I ask, okay, where's your pipeline for upgrades? How much money is there, and what needs to be done in order to get there? He doesn't have it. But that's your main assumption, that you can do land and expand. Every definition has to be done, and then afterwards, that means that within my CRM, that's exactly what's going to be there. Okay? So the definition, how to move from step to step, is crucial. And if you don't do that, you cannot move to the next step. Okay, so for example, on the first sales call in many of my companies, at that call, in order to move to the next call, I need to know that there is a budget. I need to know who's in charge of the budget. I need to know how is it they doing their decision making, and I have a gazillion questions that my sales guy has to answer for. And if you don't answer for them, you can't move to the next step. What happens when you don't build this correctly, you start lying to yourself. You have a stupid funnel and pipeline. As now as a CEO, I look at it, and I don't know shit what's correct and what's incorrect. So the first thing is the definition of the funnel, each and every one of the steps, building the requirements in order to move from step to step, okay? And then analyzing the funnel, which I'll talk about later on, how we do it. But the minute we discover this, we listen to our sales calls, we build the funnel, we'll discover what's working and what's not working. I'll give you a real example. One of my companies, we sell into HR companies, and what we started with was the assumption that we're going to sell to mid-level and SMB companies. We're going to try selling into the CEO, CTO, recruiter, HR, and team leads in development teams, and we're going to see what's going to work for us. And we look at the entire funnel, and we see what works and what doesn't. By the way, I do it even in Excel in the beginning days, and I see what's working. What we saw very quickly, before we analyze it, was that we don't have conversion from the step that we got the lead into the first call. The conversion just didn't work well for us. So we dived into it. And we see that our numbers are so low because it took over 48 hours to get back to the customers to set the calls. Okay, straight away you can see, the minute you have these numbers, you see straight away where's your conversion is bad. You can focus on it and see exactly what the problem. The minute we had a decision in the company, within the first 10 minutes we get back to the customer. That's it. From that minute, it moved from less than 5% conversion to over 62% conversion to a sales call that was done. Okay, that was a huge change for us. But at the end of the day, these kind of discoveries and changes within the funnel, within the pitch, okay, that we try, within everything that we do, this is the quicker we do it, the quicker we get to the machinery that I spoke about before. Majority of us just don't focus on the right things. If I focus only on ARR and not the learning, I don't build my machinery. This is exactly where I start losing my company. Okay? So I'll jump on this. Each and every one of you guys need to decide on what is my go-to-market. But not always I know which go-to-market to do, and I try different go-to-markets. The thing is, usually what happens with founders, we forget that this was an assumption that we want to validate. And we continue going on two different go-to-markets at the same point of time, especially in early days of a company. It's horrific for a company. It's like managing two different companies underneath one company. We need to be able to validate which one works for us and run with that go-to-market. But in the beginning, it's okay to, like we try different personas, like we try different methods of bringing customers, like we try different things. Here, we can try, but we want to get rid of the ones that are not relevant at this point. Building the right persona. The persona changes in time. You have to understand it. Okay, so I have a very good definition of the persona I'm going to run after. I know, let's say, especially here in Poland, the majority of the customers that I'm straight away looking for are international customers. I want to get out of Poland as quick as possible. But then, is it Europe? Is it US? Is it specific? Again, every one of the companies, you have a reasoning why you run after that market. Same thing, when I look at it, I want to, as I said, close quick deals, quick implementation, and a quick way of getting to successful ROI for them. In order to do that's exactly what I focus. But in venture, I also focus on companies that will allow me to raise the next round. I'll give an example, okay? So I have enterprise companies that we sell enterprise, and we cannot do mid-level. We have to start with enterprise deals. These are very, very large deals that you can't run away from, $1 million, $2 million, whatever it is, okay? And the thing is that within the time frame that we got the money and to get to success, just takes time. So the minute I do this kind of a game, that's a game that I run after specific things. In their case, we run after LOIs. So in the time that I can do, I don't have to get to a deal closed, but I can get straight away into an LOI and close these kind of deals that work well for me. Same thing with if I want to get my next round, and let's say with Zowie, our next round, we wanted to do it with an American VC, we had to have the American market. So we focused on the American market. From the lead generation, getting those kind of customers, and having, our big problem was that we had already a lot of customers here, a lot of revenues here. So the only thing we were able to change very swiftly is having a pipeline that is almost 90% US. Then the close rate started to, but in order to compensate ARR and company logos, that takes much longer. pipeline, you can show very, very quickly, and that's exactly what we did. But that's part of the building of the persona, which is relevant to the next funding round, because I cannot do that with my with just saying, okay, the persona, the relevant persona that I built specifically for the operation. By the way, in Bootstrap, that's exactly what we don't give a shit about investors, right? So we only care about the right persona in order to get to profitability. That's a whole different way. There are a lot of personas that are not profitable, and we're not running after them. Biggest mistake that we have in companies at early stage, we have these kind of meetings in management or with the founders, and they start saying, okay, this is what I think we should do. This is the iteration I think we should do. I hate having that. The only thing I have is numbers. So our discussions, I all the time have numbers in front of me. The thing is, we have too many hats as founders in the beginning. We don't have time. And that's the majority of the companies, we get to a situation that we don't have in front of us the real numbers. That's why I'm pushing you. Have the definition of your funnel. Have each and every one of the steps in the funnel. Have the numbers in front of you. So when we have the discussions, I have both the knowledge of all the calls because I heard them, and the knowledge of what's going on in the funnels. And I know exactly that I have a healthy discussion between me and my managers, between me and my co-founders. Otherwise, you're going to bullshit yourself and you're going to do a lot of mistakes. Never do assumptions that this is what my customer really needs. Biggest mistake, and we had it many, many times in early stage in Israel, that the founders were technical and they loved to develop stuff that they thought is good for the market. Never do that, okay? My customer knows much better. The biggest fun that I like in companies in your stage is that smack from the customer telling me, Ariel, you don't know shit. That's not what's important for me. This is what's important for me. Okay, and that's crucial to understand. And whoever does, is there anyone selling real enterprises? Okay, $100,000 and above. When I go into that, it's also understanding the internal politics, and especially today. So I have a company, let's say, that we have our entire TAM of customer is about 15 customers in the world. That means that I have a real relationship. I get married to these guys, okay? And when they started we started in COVID days, which was very, very hard for these kind of founders because you can't meet face to face. But now, from the minute we can, we take them out for dinners, lunch, whatever. We're so close and we know exactly what's going into in each and every one of them, because the minute one of them, we lose them, and it happens a lot, by the way. I don't know how much you felt it already, but we have a lot in the past, like a year. You talk to someone, you sell, and day after him and his team were fired, okay? Happens too much. I need, especially in enterprise, to have all my connections, not only one champion within an account. And building that is not something that I can do only in online. I need to know my customer very, very closely, and I need to be in front of him. The funnels. There's 3 things I focus on funnels. I want to touch the 3 things. Time from step to step, I have to know, okay? Conversion from step to step, and a very nice dollar sign from step to step, okay? I know exactly how much it costs me to bring a customer. I know exactly how much I'm going to do an average deal out of him, and I have the funnel till the end, okay? One of the main things that I didn't touch before and I'm going to touch now, when I look, especially in persona, I look for the entire funnel, which is not only the sales. It's including all of the customer success. What happens is we have situations, especially in the beginning, that we have sales guys that their sales lie. What do I mean by that? They're selling the incorrect sales into the customer. And we have bad customers for us, okay? In a sense that, yes, we sold it to them, but they're not able to see the ROI that they need, and they're going to churn with us. You only discover it afterwards, in the onboarding or ongoing with the customer. You have to have that built into your system. You have to see it. And all these steps, you'll see exactly, time from step to step, the conversion, and you'll learn from it. Have this in front of you. You have to be able to do it. This is how we build correctly these funnels. I want to talk a little bit regarding specifics here in Poland, okay? When I started to invest here, we didn't have a lot of B2B, and we still don't have a lot of B2B companies. So there's not a lot of knowledge, but there's also not a lot of employees, I would say, that can build. Okay, so we have a lot of good B2C companies. We have SDRs that are relevant for that and everything, but we don't have product guys that really build enterprise products. We don't have account executives that know how to sell these kind of products. We don't have the kind of people that know how to do the most sophisticated stuff, okay? And we need to build it. But I want to talk about several different points that I meet. Okay, so the first one, a lot of you guys are already selling here locally, okay? Locally is good in the beginning. I'm not saying don't do. What I am saying, one thing that works very well to sell into international companies that are selling here. Okay, so when we said in Zowie that we sold to L'Oreal, we didn't say that it's L'Oreal here. Okay, have the chutzpah, by the way. Okay, and Israeli would never tell you my office is in Israel. I have an office in the U.S. They always change the LinkedIn straight away into New York. By the way, the minute they open up their company. Have the guts to do it. I never lie, but I never need to say 100% of everything that I'm doing, okay? Usually, yes, I open up a Delaware company, yes, I'm American, okay? Second thing, and that's very crucial, if I go to the US market, just I'm touching the important stuff, one thing that I pushed Maya to do and pushed quite a lot of, Piotr can also say, when I go into these kind of markets, I freaking need to know the markets. It's not about talking English, it's about talking American. So if I want to raise for an American, you have to do it. So Maya, 6 months before we went into investment mode at all in the company, I pushed her to go. She went for almost a month to the US and met with over 100 people, investors, founders, anyone that they want connected her. And I remember like in the beginning, she was like, I'm going to meet Uzi from Base CRM. And she was like, as if this, then coming out of it, okay, so he's not better than me. The thing is, the minute you go and see, you take away all the frighten that you have in the beginning, okay? You know it much better. You start understanding also how they think, how they talk, and you need to really get into their set of mind if you're going into the US, both for investors, for your customers, and for the partnerships. The company that's going to talk right now is opening up their books a little bit here. Everything stays here. This is mainly for you guys to learn from this kind of a case study, but we'll push into the case study itself. They'll present, and then we'll have a discussion, and I'll be happy to have questions and answers afterwards also from the audience from it. So welcome. Thomas, come.
Hi, so I'm Mateusz, CEO of Epinote.
And I'm Kacper, the CPO.
So Epinote is tech-powered BPO, combining flexible outsourcing, process automation, and custom-built solutions. 6 months ago, we collected VC investment round. In terms of the key use cases that we have, there are 3: real-time AI assistance, data annotation, and data enrichment. Kacper, could you elaborate?
Yeah, so the first one, the real-time AI assistance, is quite interesting one, because we are living in an age of the rise of the AI, right? And we are kind of supporting the AI companies that do have the AI rolled out on production, but it's not accurate. And they have a problem because one way they need to train it, and the other thing is that they also need to bring value to their customers. So what we do, we shadow the AI, so we support it real-time, annotating the things that it does live. Then we have data annotation, which is also the regular one. So the companies send us like the loads of data, and we simply do the text, image, video, or audio annotation on that. And there's data enrichment, which means that it's also basically the data business. So the companies send us various data sets with like thousands of rows, and what we do is we enrich and validate them in order to keep it clean, mostly for lead generation purposes.
Great, so we'll start analyzing, and the main thing here, I'm going to take what I spoke about before and really do it together with the guys here, and in order for you to see a real case study. So let's start analyzing the company. I'll talk a little bit, and then we'll start doing the question and answers, okay? So what Mateusz and Kacper have, they have a company that is much more problematic than the normal company, in the sense that what happens when I have a very big market that I can service, and a lot of different use cases, I need to find where the right use cases. And that's much more challenging than the normal stuff. Usually it's much more, it's not as wide as they have. And that's the first challenge. The second challenge that they have a lot of competition in the lower end, on the self-serve. We have all the kinds of different players there, and that's something that, of course, diminishes the way of implementing into the market, in a sense that, why am I special? What's the difference? The customer don't really understand it. So where's the right pitch that will resonate, and who's the kind of customer that it's going to work? The third thing is that currently when they're focused, and we didn't talk about it, and right now you're focused more on the mid-level kind of companies or mid-level kind of sales. But the thing is, they come in as projects. So solving a problem, as they said, and coming into the companies. Now, the thing is, it's okay for the beginning, because we need to learn. I need to learn how to implement, I need to learn the different use cases, and I need to learn what is the value to the customers. The main thing that is important is to define it. And that's one of the things that out of a call yesterday when we prepared, that wasn't done in the preparation in the sense of in the mind. Just for example, when I do these kind of things, I have in front of me all the time, what is my goal? Where do I want to get to? Okay, what am I really building here? Because otherwise the zoom in, zoom out becomes very, very hard. Because the minute you run into the stuff, you start defocusing. Because you don't really see, because the minute I start selling, I start doing this sale, and this is bringing me 50K, or this is bringing me 30K. Great, so I ran after the money instead of really running after answers. And that's the main thing that we're currently looking for. So I'll let right now the guys to maybe start with the problems that you currently have, and then we'll have a discussion. So I touched a little bit with problems. Maybe you can, as we did yesterday, explain those problems.
Sure. So, like one of those key problems is that we've got like a lot of marketing personas, a lot of problems that we solve to a lot of different clients from different industries. So, matching them, matching the and finding like any signs of product market fit is extremely hard, because we've got like 2-3 customers of the same type, and at the same time at the same time, we've got issues with keeping the recurrency. So it's the problem of the projects type, not the subscription that we would like to have, and the expansion. Yeah. So our main hypothesis at the very beginning was that we'll acquire a client, we'll land, and then we'll expand. And we found ourselves losing in just acquiring the client, not expanding the further use cases. And the last issue is related to the product development.
Yeah, so basically what we're doing right now is searching for product market fit is we are searching for recurrence, right? So those recurring clients, and basically it boils down to the fact that the service-based company needs to be productized. And on some level, it's difficult to productize when we have those multiple use cases, right? Because you need to narrow down, you need to, let's say, declare your strategic focus in order to invest your product development resources in one bucket. And this decision comes very hard when the acquired customers are really diversified when it comes to their needs, their requirements, and what they want to achieve.
Great. So this is very, very important to what we discussed before, okay? I'll start from the last point. The persona I'm running after in this kind of things is the persona that is my dream persona. But it doesn't need to be a huge TAM. I'm not looking right now for the persona that is the $100 million persona. It could be $1 million, 2, 3, whatever it is, okay? I'm looking for that kind of solution that answers for several different things, okay? One is a customer that will be able to come and buy from me, not a project, but an ongoing, an ARR, okay? Really stay with him, because that's one of my biggest problems. I'm looking for a persona that I can do land and expand, both on what I'm offering right now to his team, but in this specific kind of a solution, and also other teams, because the biggest thing that Matthias and Kasper have is that this solution is relevant for many, many teams within a company. All I need to do is do a good land in one department with one things, then continue, of course, them using me more, and then deploying into others. So what I'm looking for is kind of customer that I can deploy quickly, okay, funny, can stay with me for a long time, can also see ROI quickly, and I can grow together with them. And that was what we started to discuss yesterday. The biggest challenge is having that in parallel to the sales that you currently have, and that becomes like an issue, because two things happen there. One, I need to develop for the other ones, and that takes a lot of my efforts. Two, my investors look, okay, I need more money. Well, you're selling. Why the heck are you not focusing on that? And that becomes an issue. And that becomes also specifically here in Poland to one point that always erases. Go be profitable, run yourself as a bootstrap at this point, and then get to the next level. In venture companies, we build companies as fast as possible to do the machinery. We're not looking for profitability. Today, we are looking for healthy companies, but in this stage of a company, it's so early. What we are looking for in venture is a company that can run fast and learn fast with not too much cost. The learning is much, much important to build it. Now, that was my next question that I asked you guys yesterday. Do you want to do a bootstrap or venture? Because at the end of the day, you can do both. And if I do the venture, my answer was very, very clear. You need to focus on that kind of persona that we discussed. And that becomes a whole different discussion. How do I discover it? So the main thing, let's talk about now, what personas you discovered that can run and you think you can run and why.
So currently we see two key personas. So one of them is related to AI development, so data scientists and AI product managers. And it targets both data annotation and this real-time AI assistance service lines, let's say. And the second one is go-to-market or sales leader who needs support in manual tasks related to lead enrichment.
Great. Do you know the sales cycle for each and every one of them?
Based on current experience, it's like from 1 to 3 months, closer to 3 months.
Great. Do you know the average deal that you can close if you offer something which is not only one time but ongoing?
Again, based on data, it's like around $13K dollars a year.
Okay, great. So what happens is we have initial assumptions that it's going to take me between a month to 3 months. Okay, I'm going to do 13K initially. The next question: how long do you think, in average, it's going to take you to upgrade them, and what kind of amount can you get to?
So those are the hypotheses that differ a lot from the client to client, and we didn't validated them yet. Usually it takes around 3 months to get into the company, get the value from the client and good feedback, and then around like from 3 to 6 months to really expand across the whole organization. But I really believe that this process can be much quicker.
Yeah, so the other thing that upgrading in a monetization terms is a derivative of usage. And in our case, usage is like the demand for other projects or processes that they can delegate to us. And basically, there were, I think, a few cases in which we actually did that. So we had like this second process within one account that we expanded on. But basically, we're not there yet because there's a lot of discovery that needs to be done within one account, and there are needs that are outside the department that we serve, because we always have like a specific champion in a company in order to be able to successfully upgrade. So I think that in our case, it's recurrence and retention first, and then also when we understand those needs that are hidden within those accounts, we can expand upon that.
Great. So just to explain the way they're thinking and what we discussed, again, we're going to have other calls. But the thing is, we have an assumption that I can do it 1 to 3 months to sell 30K average deal, and I can within 6 months altogether get to an upgrade. Again, these are assumptions. I go into the market and I try all these 3 segments and see which ones are working for me. I don't wait the 6 months. I see the entire funnel for them and I see which ones are the quickest in all the different points that we discussed. And the thing is, the minute things are working for me in one thing, I run after it and I start doubling down on it. Okay? I'll give you an example. One of my companies, okay? One segment that the founder was sure that his segment was X. Okay, in that case, it was sales and marketing, selling into it. And that segment really sold. Okay, and on average, by the way, we sold about 10K a deal. Took us about a month to close it. Okay, but we had huge amounts of churn. Within the first year, they just left us. Huge amounts. When I say huge amounts, over 50% of them left. Okay, but then there was another segment. And that segment that we only tried it, and we had 2 customers that tried it, but it was very clear That segment, by the way, we were able to sell over 30K in average, and very, very quickly, and they didn't leave us. They just grew. Within the month, they already grew. We doubled down on it, and very, very quickly, within the first year, we did over $1 million only from that segment. Okay? So the thing is, taking all these three segments, it's not running all the time on these three segments. It's discovering as quick as possible who I'm bringing in, what resonates, and then afterwards running with those the ones that are the winner, okay, and growing from it. One of the biggest challenges, and as we discussed, is doing that in parallel to the other stuff that you're doing. And from my perspective, majority of the stuff that I do, I focus on what I just spoke about, and that's exactly what we discussed. Other points that from here, just on time-wise, 5 minutes. Okay, so I want to wrap this one, so we can. But one main thing is that from takeaways from what we discussed yesterday, maybe that you want to share.
So basically the focus on switching from project and service company into the product company, and that we shouldn't focus as so far on the revenues as a key metric, but to find the product that will be truly scalable and be the door opener for the clients, and then expand other use cases.
So just to explain what Mateusz just said, okay, when we spoke yesterday, just a preparation for a discussion today, currently, the company is a services company. At the end of the day, bottom line, they do the services, which is great. And many, many times we start from services. Okay, do you guys know Magento? Magento was a services company, and they did everything for services, by the way, for 5 years. But they had enough, like services is very boring at the end of the day. And they started to develop it from their knowledge. Same thing here. It's great that you started with services. The main problem was that you didn't focus mainly, and in this case, the main KPI of the company was to move into a product, to discover what is the product, develop it, and build it. And that was the biggest challenge. And only running after money doesn't really build me a company that is relevant. In order for VCs to come in, they need to invest in a real product company, not in a services company. Bootstrap, it's a whole different game. In venture, that's why we discussed it. If you want to do that, that's building it, and the only way to do it is what we discussed just now. Guys, I really thank you very much for taking part of it. Give hands to the guys, and thank you very much. Thank you. Thanks. So just wrapping up a little bit regarding this and building to the A round from the sales learning curve. As I said, when we get to the A round, we are expected to know much, much more. Majority of you guys should know those numbers, okay? And one of the main things that when we get to that situation, it's too late, especially for a Polish founder. Not being ashamed from English. Who freaking cares? Go learn, get your English better if you feel whatever it is. Not being afraid from anyone. You're not less than anyone else, okay? When Maya started, she was one of the, I don't know how many women were here in Poland that raised money in these kind of amounts. And for her to be alone, nobody talked to. Really, someone else, another woman from here to talk to was very, very hard. Okay? You should not be afraid. That's why we invested in the beginning. She's a fighter. Okay? Fight for your companies, fight for your dreams. Okay? Don't be afraid. And the Americans only look better than us. They talk better than us, but they're not better than us. I can promise you. And go talk to Maya if you want to learn exactly what you see. But the thing is, don't let anyone tell you that you're less than anyone else, but come prepared. Come prepared, as I said before, and come prepared both on your sales, your methods of building your companies, be very, very focused on that, and come prepared also who are the right investors. I want to finish with 5 different questions I always ask myself in every round. Majority of you guys think incorrectly. Also, I did it in the beginning. I think I'm getting money from an investor. That's the wrong way to think about it. I'm investing 10, 20, 30% of my company, I don't freaking care, into some guy that is managing money for other people, and I'm doing that because one thing and one thing only. I have a really clear plan for my next round. And I know that my shares are going to be worth much, much more because of it. And I know to answer 5 questions, which you have to have when you build venture companies. First question is how much money I'm going to raise in the next round? And I know it before I raise my current round. So if I'm raising right now a seed, I know exactly how much I want to raise in the A round. what the valuation I'm going to ask for, okay, because that's what I'm aiming for, so my shares are going to be worth much more. I know exactly who are the investors, and I'm talking about not the funds, I'm talking about the partner that I'm going to run after, okay, and which I am aiming for. And I know from it exactly what are the KPIs they're going to look for, especially nowadays that the KPIs are changing on a freaking daily basis. It's so hard in venture. But I need to be very close to the market. I need to know exactly what's going on. And I know, number 5, that I have enough money and time in order to answer it. And when I say enough money, I take 6 months to raise the money. And let's say I have 18 months of run rate, then 12 months to get to my KPIs and another 6 months to raise money. That's not a good enough plan, because I get at the end of my money, okay? So I need at least 9 months before in order to start it, okay? And all those 5 questions, if I don't know how to answer them, then I screw it. And in between them, those KPIs are very much related to the sales learning curve. So when I do my sales learning curve, it's very much related in the venture world to what I need to show to the investors in order to raise the next round. And it's not only about the ARR. It's not the only thing. It's very, very important. So thank you very much, everyone. Lots of luck, and I'm really happy that hopefully you're here and you enjoyed it. Thank you.